Cineworld emerges from Chapter 11 bankruptcy and shareholders lose absolutely everything. As part of the financial restructuring, shareholders of Cineworld lost their ownership and the company is now controlled by a new incorporated entity controlled by lenders. This restructuring allowed the movie theater chain and its various parts to reduce their overall debt burden by approximately $4.53 billion. Additionally, they raised approximately $800 million in new equity capital and secured new debt financing with approximately $1.71 billion. So the way this article gets put out and presented to you is not exactly as it seems. Yes, shareholders did lose everything, but the company has not given up. In fact, it quotes, "With this newly strengthened and recapitalized balance sheet, the company is now well positioned to pursue future strategic initiatives. They intend to continue providing top-notch cinematic experiences for customers globally, including investments in new screen formats and enhancements to their flagship theaters." Now, this is AMC's competitor, and it is now an incorporated entity controlled by lenders. They are still behind AMC as they're trying to do features that AMC currently already has in their theaters. However, this restructuring may just be able to reduce their overall debt burden by a lot of money. What is going on, guys? Shocks here. Welcome back to the channel. Welcome to the channel if you're new. Today we have a lot of stuff to go over with AMC, GameStop, the S&P 500, and I'm going to update you on everything that there is to update you on with AMC so you guys don't have to watch another update video here on YouTube. All I ask in return, it's free. It helps me out. Please hit the like button, hit the subscribe button, drop a comment down below. Let's get into the video. Okay, so on top of Cineworld emerging from Chapter 11 bankruptcy and shareholders losing basically all of their ownership, Goldman Sachs analyst was just found dead in New York City Creek about 1 week after Goldman Sachs analysts gave AMC a new price target of $175. Now, wherever this came from, even if this was not the same analyst, which it probably was, but even if it wasn't, this could still be a message from the higher ups to put out these articles basically saying, listen, you cannot mess around with us. You cannot mess around with the people in power. We saw what happened to the CEO of Bed Bath & Beyond. We saw what happened to several other different CEOs, and we also see what happens to higher-ups who go against other higher-ups. It's not a good thing to see. Do you guys think this was a planned event, or do you think this was a suicide, which is what they're usually labeled as? Now, 30 million shares borrowed in pre-market and returned in pre-market as well. Either Ortex data has a glitch, or this is something I can't explain. Now, why do you guys think this showed up on Ortex? Do you think it's because they're rinsing and repeating, covering FTDs so that the clock resets? Because we are still currently sitting on the threshold securities list, AMC right here, for about 27 days now. You may just be seeing that so they can reset the clock, but those shares are not being delivered, and you can tell based on the price action. Dade Murphy tweeted at Gary Gensler, "Maybe the SEC and Gary Gensler can review their own site's literature regarding fails to deliver referred to as threshold securities, Rule 204, and make a video educating us on why they take zero action enforcing their own rules. These securities that have in aggregate failed to deliver position for 5 consecutive settlement days at a registered clearing agency totaling 10,000 shares or more, or equal to at least 0.5% of the issuer's total shares outstanding. All three of these things align with the fail to delivers on AMC, as well as the 13-day rule where they're supposed to be covered on an open market. So this just shows right here that the higher ups, the institutions, Goldman Sachs, the Citadel, the Virtu, they have power and they have too many connections, clearly some connections with the SEC. Now, to touch on some Ortex numbers before we get into the important stuff, 29.77% short interest on AMC. Shorts are still adding on slightly, utilization 81%, and I bet this rises over the next couple of days because we are seeing a flush in AMC, which is what we talked about. Cost of bar average sitting at 354% for an average and 364 max, so shorts are still paying more than 3.5 times their position. Although it's not that 1K that we used to see, it's still a decent thing to see. Ape, 18.56% short interest, utilization at 90%, and the cost of borrow not being reported. So again, most likely, whoever's short AMC is probably short Ape, and they're paying that cost of borrow fee twice. So whatever it is reported on Ortex, and I don't think this data is right. The reason I don't is because one day it's not being reported, the next day it'll have a report, one day it's not being reported, the next day it'll have a report for Ape, so on and so forth. So I don't think Ortex has too accurate data on Ape, but I do think that those those shorts are paying the fee on both of those plays. Real quick, not much to talk about on Stock Tracker, but there are 0 shares available to borrow and only 12 ETF shares available to borrow on AMC. So that's a good thing to see, which means, okay, well, you shouldn't see that downwards pressure that we have been seeing, and the short exempt volume has gone stagnant to around 200,000, which is where AMC usually sits for short exempt volume. Still a little bit high, and still definitely too high for any stock in the stock market. This just shows AMC volume decreasing, so they drop less short exempts on the stock. Now, it would appear that Bank of America has some total return swaps on AMC APE from this end port finding, which is an interesting thing to see. I'll leave the link under the video. Plus, BlackRock is now under federal investigation for their Chinese investments, including those prohibited under EO 14032. This is your BlackRock managed pension 401k/IRA being used to facilitate the Chinese military industrial complex. Everyone must comply with sanctions against China. So that's right, US government launches investigation into $9 trillion asset manager BlackRock over Chinese investments. We've talked several times about BlackRock, about institutions, these Chinese investments, how they could be using these Chinese investments to basically save their ass from certain things like AMC squeeze, GameStop squeeze, and other securities fraud that they are avoiding. So whoever has, their 401k IRA being used and taken care of by BlackRock, I would be very worried if I were you. Moving on, why is the S&P 500 down 0.6%, NASDAQ down 1%, Dow Jones down 4%, and the VIX up 8%, which is the volatility measure of the overall stock market? Well, it's because Fitch downgraded the credit rating of the United States yesterday after the close from a AAA to a AA, which may not seem crazy, but there will definitely be an overreaction to it, and that's what you're seeing in the overall stock market. Plus, last time credit rating of America was downgraded was in 2011 by S&P. Right after that, US government started investigating S&P for its role in the 2008 financial crisis, and guess what? Its CEO was forced to step down just days after the downgrade. Yesterday, Fitch downgraded America's credit rating. Let's see what happens to Fitch. So this goes back to the same thing, the power thing with the Goldman Sachs analyst. Let's see what happens to Fitch after this downgrade. Before we get into the charts to close out the video, if you guys want up to 15 free stocks, each valued up to $2,000 per stock, a chance at a Tesla or EXPE share, use my link, download Moomoo, sign up and make a deposit. It takes 2 minutes out of your day. Plus, you're getting free access to level 2 order book data, so you can see where institutions are loading up and dropping off shares, which can give you a sentiment on a play. Also, viewing other exchanges, trading options for free, going long, going short, and more. So it's a good platform to go trade on, even on top of the benefits. So make sure to go do that. And speaking of benefits, guys, pop in the Discord. The link is right under the video. I'm in there on the daily if you want to talk with me or ask me any questions. We also post gains, post losses, talk stocks all day long, and have options trading alerts in there. You're going to get a lot more through education and stock plays that get called out than paying $1.90 per month. You won't even notice it. So make sure to pop in the Discord. That link is in the description and pinned in the top comments with the Moomoo link. I dropped down, currently trading at 451.29. Tested this bullish ascending trend line that we have drawn out 2 days in a row. Dropped back down, held a hammer candle, and then tanked. However, as of right now, there isn't a ton of volume on this sell-off, so just keep in mind that the SPY is probably going to bounce off of this level, down 1.14%, and we also have major earnings to close the week. We have Apple earnings tomorrow, which I'm going to talk about in Discord and probably make a YouTube short on it. I may be playing Apple earnings, but that's definitely something to pay attention to, as since the SPY sold off today, a lot of other stocks sold off today, and it could be a cheap buy opportunity to get in before earnings. Even though earnings plays are very risky, you can see on the right hand side, Apple, Tesla, Netflix, and multiple other different tickers are down several of percentages on the day. So just keep that in mind as well. I'd watch the SPY to hold 450.50 to get a bounce. I think 453.70 and 455.50 are two resistance levels for the SPY currently. And if we do need a bigger cool off on the SPY, I'd watch for a drop all the way down to 444. You guys let me know what you think about this in the comments down below. Where do you think the SPY is going to go? And also, of course, this will affect our meme stocks, our quote-unquote meme plays, short squeeze plays like AMC and GameStop. AMC currently trading at $4.73, down 4% on the day. I said this yesterday. I'm waiting on my hands to jump into calls because It's playing out this exact cycle. It's going to come down, regain that relative low, and it's happening right now. You're getting flashed to the downside, and it's going to regain that relative low mid to late August and then rip heads off in September on that point of interest. I think GameStop is a little bit closer, however. GameStop already got the flash down, and I think GameStop has a quicker room to run. I wouldn't mind jumping into calls on GameStop over the next couple of days, especially on this sell-off. I think it's a deal. Down 4.51%, currently trading at $20.53, bouncing off of this trend line, testing this trend line at support. I'm now watching $21 and then $22.32 for GameStop. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Let me know your thoughts in the comments down below. Make sure to share the video, check my links, pop in the Discord so you can talk with me on the daily. I love you all. Lottery Socks out.